Welcome back, everyone. Sean Stevens here again with Metroplex Mortgage Services and another Loan Pro video quick tip. As the saying goes, knowledge is power. And in today's video, I will share with you the key points that you need to know in today's market to help maximize your qualifying ability. But before we get started, don't forget to download our newest educational flyer with the link below. This free resource is designed to help walk you through the home buying process step by step. It is a great educational resource for the home buying community. How can a USDA debt ratio waiver increase your maximum sales price? What happens if your qualifying budget needs a little boost in order to qualify for a home that seems to be just out of reach? That is where a USDA debt ratio waiver can help. And in today's video, we'll explain the factors needed in order to increase your USDA qualifying ability. And don't forget, we are known for keeping realtors and homebuyers updated through each step of the process, from pre-qualification to closing, along with one easy point of contact. As a starting point, your debt-to-income ratios are calculated by dividing your new mortgage payment against your monthly gross income, and also by dividing your total monthly debt payments by that same income. Now, the housing portion of your debt ratios are referred to as your PITI payment, and include monthly amounts for items such as your principal and interest, taxes, insurance, etc., while your total debt ratio consists of that housing expense plus additional monthly debt, such as any auto loans, credit cards, or student loan payments. Also, USDA published guidelines allow 29% for housing and 41% for your total expenses, but expanded ratios of up to 32% for housing and 44% for total ratios are available, provided that the qualifying credit score of all applicants is 680 or greater, and one of the following compensating factors is identified on a purchase transaction: accumulated savings or reserves available post-closing, which are equal to or greater than 3 months of PITI payments. Mortgage reserves are those funds that are available after closing, and documentation options may include a verification of deposit, bank statements, 401k statement, or other eligible source. Remember, cash on hand is not eligible for consideration as a compensating factor. Or, if all employed applicants have been continuously employed with their current primary employer for a minimum of 2 years. Applicants who have received Social Security benefits or retirement income for 2 years may utilize this compensating factor with supporting documentation. However, this would not apply for self-employed applicants. Additionally, because debt ratio waivers are applicable with manually underwritten loans, make sure your lender is able to work with USDA manual underwriting guidelines for those files that do not receive a GUS accept. In summary, don't get pulled into the weeds on the details. Just understand that by having at least a 680 score, plus one of the factors we discussed today, this can provide for an immediate boost to your qualifying ability. Remember to make sure you are working with a USDA-approved lender, such as Metroplex Mortgage Services, who truly understands how to maximize your USDA loan eligibility. We realize that USDA qualifying guidelines can be complicated, but that is where we step in to help. My team is built to help walk home buyers through the USDA process step by step. Just call, text, or email to discuss your scenario and let us show you the Metroplex difference. As always, I want everyone to make it a great day and look forward to seeing you right here for the next tip of the week.